gets this recording at the end. And with managed accounts, it's a highly asked question actually, and might be surprised by the types of traders that are asking it. There's really no uniformity to the types of traders who are interested in managed accounts. You have certainly beginners who are coming into the market who see the opportunity, especially in when currency prices and oil prices are making the headlines, day after day after day. It's kind of hard not to take notice. And you have a lot of lay people who are seeing, seeing where the euro was at, a couple weeks ago, and now we're trading today, and it's crossing a lot of people's minds who never even thought about trading. Well, I kind of saw that coming. I saw that the euro was, dropping interest rates, that Greece was in crisis mode again, that, I have an idea of what quantitative easing is, and that can only be negative for the euro, in my opinion. So things like that, that will cross a person's mind who's never seen a trading platform before. And, the penny drops, as they say, and, they see, okay, well, maybe the opportunity to make money in currencies is there for me. I just never really realized it until, I started seeing some of these moves and kind of seeing them coming to a certain degree. Granted, they might not be looking at it as closely as, you and I are with candles, and to us, it looks a little bit more challenging than that. But if you kind of take that 30,000-foot view of traders who are just glancing at currency prices, week to week or even month to month, you can see where people start to feel somewhat of a level of understanding without having to get to the nitty-gritty. And in some ways, that's not a terrible thing, to remind ourselves that, as Tom says, when we get too zoned in, sometimes that can be to our detriment with our nose on the screen. So managed accounts are many times the first place that a beginner will come to if they have the capital. And when we look at this, the reasons and not, quick mention to the risk disclaimer, even with managed accounts, even when you have professionals managing your funds, which Aura FX does give you the opportunity to do should you choose to pursue that, risk still exists. When Warren Buffett trades, risk still exists, right? So risk never leaves the market. It's been well covered here, so we won't go any further with that, but it's still there. Now, for these people that come into the market looking to get into it, seeing the opportunity, seeing possibly hearing how others have done, many times they will want to start with the professional money manager. Certainly if they're a person who also doesn't necessarily have the time or don't feel, at least in the beginning, that they have the time to trade for themselves or get into what you folks have been engaged in so deeply here in this boot camp, then a managed account might make sense because it is hands off. It is professionally managed. And your risk, the key element that we've been talking about for these 2 days, the risk element of the trading is in very good hands, and that to me is probably numero uno for why somebody goes into a managed fund, because you might see eye to eye with the fund manager. I've been in meetings where I'm with professional money managers who are trading into the millions of dollars, and they might what they have to say about what they see coming up in the next days and weeks might not vary greatly from what the person investing with the money manager sees, right? They might see eye to eye, on certain moves and trends that are going to be coming up. So then why is the investor putting the money with the money manager? Because the money manager knows how to manage the risk involved in the market better than the investor who hasn't had the experience yet, hasn't gone through the ropes of trading, especially in some cases with large amounts of money. So it's not always about, as we've covered so many times now in these 2 days, it's not always about identifying the moves or having a projection of where prices are going to go. It's also about managing the trade and managing the risk involved, which Aura FX does have those professionals on board. So if you fit that description, I mean, it seems everybody here obviously is looking to trade for themselves at some level, okay? But if you have excess capital that you're looking to consider where to invest it in the very, very short term, money manager is a consideration, and it always really should be, even when you start trading with real funds. If you're still grasping the concept of drawdown, so we've talked about drawdown is basically the floating loss that you're taking on over any given specified time period. And relative to, drawdown is always referred to in correlation to the gains that you're making over that same period of time. And so many times the money manager's performance you will look at those statistics, the return as alongside the max drawdown over a certain period of time. So as a self trader, if this concept is kind of something you're struggling with, we can also kind of infer that it's the reward to risk ratio that we've talked so much. We can talk about that all day long, but at the end of the day, until you have live funds in the account and you're actually trying to implement those proper reward to risk ratios and finding yourself doing it consistently, which we have the fullest confidence that everybody here can do that. But until you see that for yourself with your own eyes, and until you identify that you're not necessarily falling into bad habits, Tom has talked several times over the past 2 days about keeping a trading journal. That's really the purpose of it, because it's really to force ourselves not to fall into bad habits. That trading journal is fantastic. Just like the professional baseball player who's making millions of dollars per year, why does the guy's getting paid $25 million to play in a baseball team? Why does he need a batting coach? If he's such a good hitter, why does he still need a batting coach? Because even the best baseball players fall into bad habits. The mechanics of their swing might fall off for one reason or the other, right? It's a long season, right? 162 games in a baseball season, right? It's very possible that even the $25 million player who, compared to all of his peers, is the best out there, can still fall into bad habits and go into deep slumps. Why does that happen? Because we're all human beings, right? It's not, we're not robots, so we can fall into bad habits. And the same is true for traders who are profitable, doing well. Bad habits can slip in, and if the trading journal helps avoid that. But if you're finding that it's taking a little bit longer, for you to reduce those bad habits, or you want to not necessarily, maybe you're trading with a little more money in your account than you're necessarily comfortable with, the trading on your own, then maybe perhaps you put a percentage of the funds that you want to have in the market. So let's say you were interested in putting $10,000 in the market, hypothetically, but you really were only comfortable trading 10% of that or 20% of those funds. You could put the other portion, the larger portion, with a money manager. And over the years, I've seen that done over and over and over again. And I really like that approach because the nice thing about working with a money manager is they talk to you as well. And so kind of what you've gotten in this boot camp here what you have definitely gotten in this boot camp for 2 days, a money manager also can work in that capacity with you, especially if you have money invested with them. They have a vested interest in making sure that you're aware of what they're doing and the logic behind their trading and everything like that. It's also an opportunity to learn. So, and that is that third point really there. Want to be involved in the market as both a self-trader, okay, and an investor. In many of those cases, again, the self-trading side is with a smaller amount of funds relative to the investing side. And kind of similar point, have experienced a drawn-out, difficult stretch in trading, but want to remain involved. It's similar to the baseball player slump, right? Sometimes a player who in the previous season had the best batting average of anybody in the league hasn't gotten a hit for the past 30 at bats. Why does that happen? Well, at first it was just a 10-hit batting slump that extended, but slowly, the longer that general all-star player went without hits, that little doubt creeps into your mind, right? Because we're human beings. Confidence slips a little bit, and then what happens then? Bad habits start to come back in. We start to, where previously we would let our profits run, and then we were rewarded with that over time, because we're in this bit of a slump, we start taking profits early again. But our rules say we don't want to take profits prematurely, but guess what? We've lost a few trades in a row, our confidence is a little bit down, and so now we're breaking the rules and we are starting to take profits early again because we want to lock in a trade that's in the black, right? We all can see how that might happen. So sometimes those periods go a little bit longer than others. It's if we're going to be in the market for years, we're going to have, there are ups and downs in trading. Not every trading day is going to be completely rosy. But if you find that you might want to sit on the sidelines for a little bit, there's absolutely nothing wrong with that. There are traders who are do very well and who are profitable, and you would say, why are you stopping trading for a month or 2 months? And they say, well, I just want to break. I want to travel a little bit, or if they're doing well, or take some time with the family, and then I'll come back to the markets in a month or two. Like any business or any venture that's you're dedicating yourself to, we all need breaks from time to time, but we possibly don't want our money to stop working for us. We might want to take a small break, recoup, get a little rest, and come back. But we don't necessarily. We're all here because we understand the time value of money, right? And we don't necessarily want our money to sit there when we're not trading. And so a money manager is nice to fill in those gaps, those periods maybe where you're dormant, okay, but you still want the ability to take advantage of what's going on in the market. 2015, this has been quite a year. I mean, we're only in early March, and Tom probably has seen some years that have resembled this, but at least me going back to 2003, I can't recall such activity in the markets, starting with the central banks first and foremost. Obviously, we had the Swiss franc depegging from the euro on January 15th, which, if that's setting the tone for the year, then we're in for a very exciting year. We all, volatility is, I think we all can say that we don't dislike volatility. We like it, especially when the trends are strong and move, as Tom went into. But again, you might not feel that you're ready or necessarily ready to trade at least the lion's share of your capital that you have to put in the market. So, but you don't want to miss out, because 2016 might look different than 2015. And so we might want to strike while the iron is hot, as they say. And the last point, I didn't want to neglect this, as I put this together, because you have no idea how many people we speak to who are starting with the smallest of accounts, a few $100s, and who's to say that 5 years down the road, 10 years down the road, they won't be a money manager? You can never say. If you look at some of the biggest traders in the world today and you ask where they got started, how much money they got started with, many times, in some cases, it was in the very low hundreds of dollars. And so, never sell yourself short as a trader. Same goes for athletes. Guys who were drafted in what was Tom Brady drafted as? And for those of you who follow NFL, I believe he was drafted in the 6th round. He just won a Super Bowl, right? He's won 3 Super Bowls. Probably should have. Or he's won 4. He probably should have 6. He was the backup. Not only that, he was the backup quarterback at Michigan. He wasn't even the starter in college, and he just won a Super Bowl. So you never know what potential you have out there, and it's interesting to see. And I think that's why what Tom has referenced and everybody else has referenced. We really enjoy working with traders, because you really do never know when you speak to the same trader a few years down the road where they'll be at. They could be, very far in this business, and you can't always pick them. You can't always say, well, because this person got a finance degree, and had a 4.0 average in macroeconomics, he might not be that top trader, that person or she, right? It's there's a lot to trading that cannot be learned in a lecture hall. And it takes getting into the markets, getting to see what you are about, and I think it is Tom, or one of our team members who like to always say, if there's one of the subliminal benefits of trading among the many is that you learn a lot about yourself when you trade, and some of your tendencies and things like that you maybe deep down are aware of, you really can't ignore when you're trading. And in general, I think that's probably a good thing, because it's good to know that and identify those things. And for trading, you're forced to kind of address them if they need addressing. They don't always, but it's a nice practice. And I'm sure some of the people that we've spoken to, not just in this boot camp, but in recent days and weeks, I'm sure we will see some money managers from these groups of people, if that is the goal that you have in store. So something to keep in mind. And what better way to start going down that path than actually working with a money manager who you can chat with on a week-to-week or even day-to-day basis. So in terms of approaching a managed account with Aura FX, if you decide that's what you want to do, the application process is exactly the same. We have an online application on the website, right on the homepage. Can't miss it. Open an account. The only additional paperwork you would need if you were going to sign on a money manager to trade the account would be a limited power of attorney form, which is can get over to you by email. And they don't really, Aura doesn't really reference a strict minimum investment for the managed accounts. It really depends, and they go case by case. But if you do have interest in pursuing a managed account with Aura, that's fantastic. You're going to be getting a lot of emails, or a lot of content over email in the next few days. But for this particular case, it would be great to fire an email over to sales@aura-fx.com. If you'd like more information, you can just put in one sentence. Please tell me more about your managed account program, and the right person at Aura FX will send you an email. And if you leave your phone number, that's even better, because then they can give you a call and go through a little bit about what the options are for managed accounts, and really get into the nitty-gritty of the details about how Aura goes about it. And I've spoken to them, and they're fantastic. I mean, you'll really, I think, enjoy the phone call in the very least. So I said this webinar would be a bit shorter, and it is. So I want to thank everybody for attending the boot camp. I will announce our winner here before everybody falls off. John Brimble Combe from New Zealand won today's contest. So congratulations, John. It's $500 in an account. So you might not need a managed account just yet, because you have $500 to trade with. So good luck with that. Hopefully you turn that into $5,000 with the right risk management. Just a little joke there at the end. But and everybody else, keep your eye out for an email to claim your $50 account. Again, by the end of this month, that will be available to you after you provide us a little feedback on the boot camp. And of course, all feedback is valued. So really, anything that you thought over the 2 days can be as specific as you like, as general as you like. Everything is really valued. I'm sure this will not be the final boot camp that Aura FX hosts. So we really appreciate you coming this time around, and I'm sure for many of you, hopefully, we'll be working with you as live account holders if we're not already. And so beyond showing interest in the managed account program, any other questions that you have, please feel free to also include them in that email to that email address, sales@aura-fx.com. I see John is getting some congratulations in the chat room. That's always good to see. Everybody's a good sport about it, and we really enjoyed rewarding the people for coming, and everybody else. You'll see the rewards will come in other capacities as well. So for today, we'll leave it at that. Again, everybody who came in yesterday will also get the price action analysis information that you will last for 30 days. So that will also be in the email that's coming. So please keep an eye out for that email. Generally, they do come into your inbox, your main inbox. In the off chance it might go into your spam folder. So over the next few business days leading into next week, if you don't happen to see something come through, please just take a glance in your spam folder. Unlikely it'll go there, but just in case. And you will also get a phone call. So can certainly expect to hear from us. Any last minute questions, sign-offs, anything that you would like to hear from us before we sign off for these 2 great, fantastic days with you?
Dan, this is Tom. I've got a question.
Okay, it looks like our attendees
John is, because
yes.
I heard that the pints are on him.
Mm-hmm.
Is that true, John?
John, Tom is saying he heard the
John.
pints are on you down in New Zealand.
Yeah, I guess you're on your own. Congratulations.
He's an option. Nice. Okay, great. So, and it looks like, another great residual benefit of this 2-day session is it seems like a lot of you folks who attended exchanged pleasantries for sure, maybe even exchanged a little bit of contact information. No better way, especially if you came into the boot camp kind of on your own, no better way to get into the markets than having a trading buddy, especially when you're trading with real money. Somebody to bounce ideas off of, somebody to do, to see if they see things the same way. That's extremely valuable, I can tell you from firsthand. So we'll leave this window open here just for a couple minutes if there is any more of that you guys want to exchange, and then we will close it down likely after the next 3 to 5 minutes, and we will certainly speak to you again. So this is not the end. For now, we'll bid you adieu, and we look forward